Alright traders, George here with some insight for you on an auto trade strategy. And the idea here and what I'm looking at is the FOMC rate decision which occurred today. This is the pinnacle of all of these standard econ reports. It's the one that's given the most attention, and while we don't really care what the Fed says or does, what matters is that there is some emotion and volatility around this report, more so than any of the others. Which include things like GDP, jobs, housing, etc. So the FOMC rate decision happens to be the most volatile of all of the standard econ reports, and it's a difficult thing to trade. A lot of it has to do with emotion, and a lot of it has to do with lack of rules, a lack of practice, and the one thing that's working in our favor and a new tool that we have to use is, as I've been speaking about in some of the earlier videos, is technology. So I'll show you how technology can help with a situation like this. Here's what the emini did today. This is a 5-minute chart, S&P futures. We had a bear continuation pattern coming out of the Globex London session into the US session here. These charts are Pacific time. So here is what the Fed is all about. The report's at 11 Pacific, that's 1 Central, 2 Eastern, and this block right here, this is about where it all goes down. So right about here and then to the close, which is right about in this zone here. So this is the price action that dogs so many traders, and it's sort of a lure that pulls them into perhaps doing some of their worst behaviors in the market is around this volatility. I hear people say they like the action, yada yada. That's all a big problem and a red flag. So if you choose to be part of a day trade experience that late in the afternoon, in the most volatile of all the econ reports, you've got to ask yourself why, and what tools do you have at your disposal? Well, here's something that I've got that I can show you that can help manage a lot of the problems that are associated with this. So here's a 5-minute chart, here's the action, and you can see a big whipsaw up and down right there. They sell it off, they drive it up, they sell it off, they move it up a bit, and they go sideways. This is very rough to trade this and very rough to extract much in the way of profit out of this type of action as it unfolds. Enter the auto trade arena. So what I've got here is an auto trade program for our Brickwick model, and for this particular strategy what it's looking at are, well, it's looking at one of our indicators, one of our proprietary indicators that looks for some sharp reversal signals in a minute way versus the larger scale market moves. And what I'm doing is, in combination with what Ninja allows us to do to program on top of this, is I'm using a 2-contract strategy so that when this is implemented, what happens is every time one of these signals fires off, I'm in the market with 2 contracts. They each have a different stop and a different target, but they're both fixed values. So I won't lose any more than the fixed stop, and I won't gain any more than the fixed target. What is good about that strategy in a situation like this is you're not really looking for any huge momentum runs. You want to be part of that constrained volatility and be able to profit in it without experiencing losses. The fact that it's auto trade means that as soon as the signal fires off, you're in the position. You don't have a chance to second guess, to fumble with your mouse, anything like that. Is there one more comment Bernanke has to make? Whatever the thing is, it doesn't matter. The system is off and running. This is literally a plug and play strategy. And just to show you what I'm looking at here is 15 minutes before the econ report. So that's 10:45 Pacific, 12:45 Central, going to 15 minutes after the close. For you folks out there that are Brickwick traders already, this is on a 5-2. All right. And we'll talk about this more in the live room, but here's what it did. This is just for today and just tuned for this type of volatile activity. It did $1,825 on 20 trades with a 90% win ratio. You know my thoughts about percentage profitable obviously not being that important. Here it's almost through the roof, and that's fine and dandy. It's great to see that. We have plenty of strategies that are doing well as low as in the 30% win percentage, but they have dynamic profit capture while this is fixed, and that's why you get the higher win percentage because of the fixed targets there. This actually made money on the long and short side, and it's all based on that price action I just showed you on the 5-minute chart. So what we'll do with this strategy now is we'll carry it forward into the next FOMC afternoon reports, and we'll look to see how that does for us This is for the S&P emini. That's all about an auto trade program, the Brickwick model here. And I'll be running this tomorrow in the live room on oil. And we'll see you there tomorrow.